Hi, Session 9, Section 3. So we'll continue on with bookkeeping and taxation. The next thing we're going to look at is FPOS. So FPOS is electronic funds transfer at point of sale, and you'll all be very familiar with that because many businesses use FPOS. So it's part of the payment options that's important to provide clients with access to, because a lot of clients don't work with cash these days. Many people use cards at their supermarket, their service station, and so on. So it's quite a common way of transacting business, and it's in your interest to have an FPOS machine. So FPOS services can be provided by your bank, and wireless allows this kind of service in addition to landline and iPhone services. So it's very easy to use an FPOS machine these days. Be aware, of course, that there is an installation fee which normally applies, as well as a monthly fee charged by the bank to maintain the FPOS facility. And a fee between 1 to 3% of the gross turnover is also payable. So they managed to get the remuneration for the service that they offer, but it's so worth it. It's so worth it It's so worth it in terms of convenience, ease of use, and providing a service to your clients. A fee may be payable to discontinue with the FPOS service too. Be aware of that. And banks vary in their conditions and fees, so it's worth shopping around and having a look. Don't just go with your own bank necessarily because you have a bank loyalty. Check it out and find out which FPOS service provides you with the best fee for service. Some professional associations have obtained very reasonable priced FPOS service for members through negotiations with their banks, so it's very valuable, worthwhile to work through your association because they've done all the groundwork for you. High caps. High caps is something that's commonly used and people love it. It's health industry claims and payment service. So it's an electronic claim health insurance scheme claiming service, and it provides members of participating health funds the convenience of electronic claims at point of sale. So a health fund and Medicare Easy Claim. So it processes payments payments at the point of sale. Very handy because people don't have to then go go and stand in a queue to get their returns. It delivers real business benefits to health service providers, and it saves time and money. And for patients, it's so convenient. No more queuing in health fund branches and filling out claim forms. So it's a very worthwhile service to get. Have a look at next activity. Using the handout High Caps Provider Agreement, read the sections on the following, and if you're in a tutorial situation, discuss it with your tutor or your class if you're in the forum. So the confidential information, how does this fit with your understanding of privacy and confidentiality? And what's the legal background to this? That's the first question to discuss. Secondly, find the section on the health services provider. What is the legal reason for some services to be specifically mentioned? And how does your industry sit with the definition of health service provider? And what are some of the services that High Caps provides? Okay, so that will inform you. It's very worthwhile doing this activity because you'll notice that in your practice that if you use an FPOS High Caps device, well then you'll be providing a very worthwhile service for your client. Let's go on and tease out the notion of bookkeeping and how we're going to work with that. Well, regardless of the size of your business, it's required by law to keep its financial records in good order. This is done by a bookkeeper, and it differs to accounting, usually done by a bookkeeper. So bookkeeping involves recording all business transactions into manual ledgers, or more likely into a computerised accounting package like MyOb, Mind Your Own Books, or QuickBooks. So these are packages that actually include sales, purchases, income and payments by an individual or an organisation, and they can do it for you. So all of your transactions, these are the type of transactions that you have to keep a record of. And there are some common methods of bookkeeping, such as the single entry bookkeeping system and the double entry bookkeeping system, and we'll see a little bit later on. We'll differentiate between these and have a look at how the double entry bookkeeping system is generally the most well used system, because it covers all bases. Let's have a look at the single entry bookkeeping system. Is simple and is typically used by individuals when balancing checkbooks or by small businesses that deal in cash. So in single entry bookkeeping, each debit or credit is recorded just once, making it a simple system for keeping track of the flow of funds into any account. So just when a sale is recorded, the amount is recorded. When there's a debit, so purchasing goods for the purposes of on sale, then that would be recorded as a debit. Separate account records are maintained for petty cash, accounts payable and receivable, and other relevant transactions such as inventory and travel expenses. So have a look down there at that link. You've got a link there which actually gives a good demonstration, or a good example of how to use, explains how to use single entry bookkeeping. So here's an example. If you ever used a checkbook, then that's a great example of how to apply single entry accounting for system. For example, you write down a transaction description and an amount of money on a single line, whether it's expenditure or it's a credit to your account. There are no separate columns used for debits and credits. Instead, you have a single column full of positive and negative numbers representing your cash flow. So very simple. It simply records what goes out, what comes in, what goes out, what comes in. If you add the column, provided you have added up correctly, you should get an accurate picture of your current balance in a given account. So you add up the incomings and you subtract the outgoings, and then you've got a good idea of what's in your account. So again, have a look at that. There's a reference down there. Have a look at that same website. Let's have a look at double entry bookkeeping. Well, it's the one that's most used by many businesses. Double entry accounting uses two columns to reflect both debits and credits. So you've got a credit account, a credit column, and a debit column. Additionally, each debit must have a corresponding credit assigned to a different account. This means that each transaction is recorded in two places, so you do the maths twice to make sure that everything is properly balanced. So accountants and taxing bodies prefer the double entry system, and as long as you enter the correct amount of money as both a debit and a credit to the pertinent accounts in your system, your books should always balance. Again, have a look at that reference, and it'll give you a good example, a good bit of amount of information on it. Let's have a look at an example. So here's an example. Let's say you're a housekeeper and you've just signed a new client for a cleaning job. The client will pay you upon completion of the job, but has not paid you yet. If you're using double entry accounting, you might write the same amount as a debit assigned to an account called accounts receivable, and a credit to your revenue account. So you've got a perceived income coming in, which is accounts receivable, and that's a debit. And you've got a credit to your revenue account. In this way, you can keep track of the account, and it's easily recognisable for entry for tax purposes. So it allows you to have a thorough record of exactly where that money comes from and when it's expected to come in. And it's traceable in terms of following up a debt. So let's have a little look here. Double entry bookkeeping principle. For every transaction, there are two entries. So if you look at the debit entry, you balance the sheet items. You've got your assets, which are the what you hold in your hand with certain sums of money, and then you have your expenses, which are profit and loss items. So that's your debit column. In your credit column, you have your liabilities. So that is what's expected to come in, and then you have your income, which is what comes in. So you check those out. Have a look at the reference below, and here's an activity for you. As a class, read the exercise on double entry, and your tutor should discuss with you the process with you in PowerPoint 32. So in page 32, split into groups and complete the exercise sheet provided, and then feed back your answers to classes. If you are in a forum, which is what you'll most likely be doing, work with groups within the forum and complete the exercise sheet provided, and you can talk with your tutor afterwards. Okay, thank you.